Hello and good morning, everyone. This is Kevin with Real Traders Webinar. And first off, we would just like to say thank you for spending your Friday with us. We have a special lineup of some of the best world-renowned experts in the industry that will be presenting all day. And throughout the day, they're going to each be presenting their own unique style and methods for training and sharing the best techniques and strategies with you. So sit back, get a pen and paper, and get ready to take some notes. And before we get started, I just want to mention one quick maintenance announcement, which is to keep your seat. Throughout the day, people will be coming in. As soon as the room gets full, the room gets locked, you will not be able to get in. So without further ado, first up, we have with us Norman Hallett. And Norman is the co-founder and CEO of Subconscious Training Corporation, headquartered in Parkland, Florida. STC develops state-of-the-art mental training for the trading community through their widely used program, the Disciplined Trader Mastery Kit. After having spent time with Payne & Weber as a stockbroker, Mr. Hallett has developed numerous successful startup companies, including CTA investment firm of Hallett Commodities and the introducing broker operation NCH Commodities. Mr. Hallett holds a BA in mathematics from the University of Cincinnati. His high-profile style resulted in him being a frequent guest on top news programs going as far back as Financial News Network. Mr. Hallett's popularity skyrocketed when his popular radio talk show, Risky Business, which had a strong 5-year run in the 1990s. Most recently, his concise ebook, Mental Fitness for Traders, went viral and has been downloaded by over 250,000 traders worldwide. In addition, his YouTube channel featuring his weekly 4-minute drill for traders is about to eclipse 500,000 views. The Disciplined Trader Mastery Kit has tightened up the trading discipline of thousands of traders from 42 different countries and expanding. Today, he'll be showing us the 5 master keys to disciplined trader. Norman, it's all yours.
Okay, I'm assuming everybody can see the screen up there, the 5 master keys. I want to thank you, Kevin, for the fine introduction that I wrote and I had you read. So you had all the high points in there, so I appreciate that. What a lineup here, and I know that many of the people here are probably from my list. I was very strong in recommending coming here because the lineup of speakers, I mean, you've got Larry, who you've probably seen around, Andrew and Mark. We call Mark Frenchie around here because so many Marks in the business. But these guys are very well known, and they're gonna perform. There's a couple of guys here after me. Of course, you've got what we call him the Trade Finder, and that's Hubert, who's going to follow me at 11 o'clock. But you wanted to pay attention to him. You certainly want to see Eddie Z later on, or watch the recording if you can't see him live. We neglect our hardware a lot, so Eddie Z is all about hardware. He's a fun guy. He's local here. We have lunch every once in a while. He's terrific. And of course, the elusive Barry Burns, who looks like he's going to be the last presenter today. I probably have gotten more, over the years, gotten more positive feedback on Barry Burns and how he's clear, concise, and how he gives a damn about people's success, trader success. So Barry, can't say enough about him. So great lineup. I'm really glad to start it off because really, I think that anybody, if you've been on this trading train for any length of time, you know that the missing key to most traders is the discipline. And when we were naming the company and naming kind of where we came out with the word discipline sounds like work. Well, for some of you, some of you deviates, it may sound like fun, but discipline sounds like work to a lot of people. And so when we named our company the Disciplined Trader years ago, about I guess 13, 14 years ago, and we really came up front with it about 7 or 8 years ago and came out with the Mastery Kit and so on. There was always a fight. Should we call it the winning trader, the disciplined trader? Discipline just sounds like work. Well, it's not work. Discipline is order. And when you have order in your trading, this is what makes it. It's what gives you consistency, and it really is the key. You wonder why 92% of traders lose. They got all these great trading plans, and some of them are really good. People are still losing. They can't follow their plan. So I want to give you today what I consider the 5 master keys to disciplined trading. And this is one you're probably going to want to watch the review on because I'm going to move fast through here. and I think you're going to find it, the material here very useful. So let's hit the right button so we don't get those noises and get into it. Why do traders resist training for their trading discipline? Well, you got to look at yourself, and I think most traders are spending most of the time looking at the market, trying to find that chart that gives them the trend that they want to take advantage of. But most are not really looking at themselves. When you look at yourself, you've got to be honest with yourself. And in a world of fake it till you make it, which I do believe in from a going forward standpoint, when you're assessing yourself, it's really good to be brutally honest with yourself. And why is it that one trader can't? One trader is doing very well with a trading plan, hands it to trader 2, and that person trades that plan and somehow doesn't win. It's usually because the trade doesn't fit them as an individual. So looking at yourself is really a matter of seeing what your strengths are. Are you a patient person? Are you somebody who needs to have the action all the time? Is somebody who would rather not have the action and slow down the movie? I mean, all of these things are good. There's no good and bad. So looking at yourself is really the first step in building the right trading plan for you. But also, again, most people are not willing to look at themselves, so they really can't get a foothold on their trading discipline. Taking responsibility for your trades. You know, it's much easier to blame the market and blame me. I'd actually rather you blame Kevin or one of the other panelists. But you can blame me if you want, but anything but blaming yourself. And I just think that this whole idea of blame, and when you make mistakes and you don't take a signal, and it would have been a big one, and you chase a market and you grab, you chase it too late, and of course it goes the wrong way once you get aboard. All of these things are just hiccups in a very disciplined you. And I say that because that's the way I frame things. I'm going to show you more about that later. You got to take responsibility for where you are in order to be solid on where you're going. It's easy to blame the market. Some of us are actually too lazy to put in the work. And again, work in the case of mental and emotional fitness is not work. It's some of the most pleasurable stuff that I do. From the standpoint of mental training really should be part of what you do in trading discipline. I mean, you're constantly seeing whether it's superstar athletes or superstar performers. I guess I'm including myself in that group. So that's what I think of myself. They're all meditating. Everybody's meditating. Everybody's self-hypnotizing. Everybody is talking to themselves. Everybody is gearing themselves up for what's to come ahead, whether it's the week or the day or the moment or the act. So, and that meditation is really quick to do. I know our meditations are only 7 minutes long. They're designed specifically for traders, and it's part of our Discipline Trader Mastery Kit. And I mean, just to take 7 minutes is not a lot of work. But in the hustle bustle of the day, just to stop and do anything for even 2 minutes seems like work. We seem to be too lazy. You got to slow down. You got to make sure that you understand that certain things you must do to get your head straight in trading. And finding the Holy Grail is the most important thing. I mean, why bother with trading discipline if somebody could tell you exactly where to buy and where to sell? You wouldn't need any of this. You wouldn't need it. I mean, you could be the wildest person in the world, but if you just stop for a moment and buy when somebody tells you to buy, sell when somebody tells you to sell, or a system tells you to sell, or an alert system. But that's not the real world. First of all, the Holy Grail, the search for the Holy Grail doesn't exist. Second of all, when you think you have the Holy Grail, you still got to be disciplined to follow the signals. So all of these are just excuses, and really the solution is really just a few minutes a day. So let's talk about the master keys. A sound trading plan structure has to be the first master key. your trading philosophy is what's got to be identified first when you're building a trading plan structure. What do you believe in? For me, I've been trading over 30 years. I've been trading since 1979, so I guess that's about 35 years now. And in the second year of my, really the end of the first year of my trading, or the middle of the first year, that's when gold hit $800 or $850 the first time, and silver hit $50 with the Hunt brothers. So that's how far back I go. But because I was seeing money piled on top of money in a very quick fashion during those couple of months when silver and gold ran, I thought, boy, where have I been all these years? I really want to help people to plug into all of this. Little did I know at that time markets could go down actually faster than they go up. So I've grounded myself since then. But some of my trading philosophies over the years have changed, and so my trading, the content of what is in my trading plan changes. But a couple of things for me that have been steady throughout my development and my changing of trading philosophy is Fibonacci and candlesticks. That, for me, makes sense. Why? Maybe it's because I have a mathematical background. Fibonacci is a universal law. It's seen in, you know that it's seen in whether it's a snail shell or a spiral galaxy. The ratio of the expansion, it's an expansion ratio, is the same throughout the universe. And so why not be in the same as far as pricing is concerned? So that always made a lot of sense to me, and I always respected Fibonacci, always been a part of my trading plan. And I say it with strength here because it's important that you build your plan on what you can believe in, because when the doubts start to creep in because of CNBC or your trader friend who tells you this, or some article you read that may jeopardize your position, or you getting close to your stop and you want to move your stop because you don't want to get hit, and all of these things happen to negatively impact your ability to follow your trading plan. But because it's based, my trading plan is based on Fibonacci, something that I have a root belief in, it means a lot. It makes it much tougher for me to get off my plan. My default position is I'm on my plan all the time because it's built on things that I believe in, and I made sure that it is. Candlesticks are the same thing. For me, I guess I got into the whole mental and emotional issues of trading because I know what emotions can do. I've been on the floor. I've been in trade. I ran one of the largest option firms in the country. I've looked over a sea of brokers, and I've seen the responses on their faces from talking to people on the phone about what's going on with their trading, and I see that that a lot of winning and losing in the market is based on emotion. You say to yourself, well, why did the market jump like that? Didn't make any sense. Well, it was something emotional that happened in the market that I can pretty much guarantee is what caused the situation. I'm sorry if you hear my dog barking in the background, but I guess the beauty of being an independent trader is that you get to work at home. So I hope that is not too distracting to you. Candlesticks is another thing that I believe in, again, because of the mental and emotional issues that are involved in trading, and the reflection of those mental and emotional issues are seen in the candlesticks. The fact that that candles hold a priority to the open and the close of a market, or of a time frame where decisions have to be made at those two junctures, and at the decision-making points are the most important points, because they're the points of the high emotion, and therefore candlesticks respect that by having a lot of their interpretation based on the open and the close, and the real body, they call it in candles. So again, another thing that I like. So in most of we do something called simple trading plans that we'll be introducing really to the world. We're working with the beta group right now, and we're a few weeks away from presenting it to the world. SimpleTradingPlans.com is a place where we talk about we hand you simple trading plans, and all of those simple trading plans involve candles. One involves Fibonacci, and so on. My point is that I carry what's important to me through my trading plans, and you should too. Don't listen to anybody else. I know you have a favorite, so my advice is to keep your trading plan simple and keep it with respect to you, your trading philosophy. Okay, trading psychology. You should have certain statements of understanding about yourself somewhere in the intro of your trading plan. Or I of course have it in my journal also. We're going to talk a little bit about journaling, but trading is it's very, very important that you enter in the psychological factors, that statements of understanding about yourself. Okay, that I'm a person that likes the action, and my trading plan reflects that. So you need to take in your own trading psychology, your trading system, the time frame, long-term swings, intraday. These should, of course, be part of your trading plan structure. Risk evaluation and control, different for each time frame. You see, these things are things that you probably already know, but the importance of it is that if you can be honest with yourself, your trading philosophy, and your own personal psychology when you build your trading plan, it's going to be much easier to follow. It's going to be, that's the key to, it's a major key to pulling the trigger. If you're not pulling the trigger when your trading plan gives you the signal to pull the trigger, either on an exit or entrance, then it means a lack of trust in your plan. And the lack of trust in your plan may very well be this lack of fit here that I'm talking about. And the truth of it is, it usually is when I talk with traders one-on-one. Of course, you've got to decide whether you are a fundamental trader or a technical trader, or a combination of both. Even most technical traders can have a fundamental bent to them. For instance, I have an account. My retirement account is run by another person, somebody that understands bonds and a balanced portfolio. I understand. I mean, I did have exposure to it with Payne Weber and other places that I've worked, but I give that money to somebody to manage because they're an expert, and I know that person. He's an expert. So in that, he's always long the market, whatever it is, 60%, always long the stocks. And so when the market's going down strongly in the stock market, I know that my retirement fund is going down, and somehow that doesn't give me a good feeling. So what I have is, I actually have a specific futures account that all I do is I short the S&P. In other words, when I believe that I've seen something strong technically that indicates a break in the S&P, I know that my retirement account is about to go down, so I offset it with this particular account to short. I look for places to short the stock market in this account. Now, I tell you this because to me that's a fundamental. What I'm doing is taking certain fundamentals in the market and so about fundamentals in an overriding capacity. It's really not. Yes, I'm shorting the market, but my particular account is only for the short side of the market. It doesn't trade long. So you may have a feeling about a market that. For instance, I try only to trade grains on the long side in the summer. And I didn't have many trades this year. In fact, I haven't had any trades in the last 2 months because I haven't had any triggers. The market's been doing nothing but going down. But the summer months are usually very late spring, early summer, usually great long term. So I know my seasonals in certain agriculturals, and so I will only trade from those sides. So because I know the fundamentals, then that reflects how I operate from a technical standpoint. Enough said there. Of course, you need your entry and exit strategies, including where and when for adjustments. And I capitalized exit strategies for a particular reason, and that's because your exiting is much more important than your entrance. Years ago, I challenged somebody who didn't really take me up on the challenge, but just open an account, get in wherever you want, and I will manage the exit. And I believe I can be profitable over the course of time. And the reason is because it's the exit strategies that, you'll give yourself a leg up by getting into great trades on the entry. But really, the making money part is all about your exit strategy. So you need to pay extra attention to that. Okay? So elements of a trading system: define your entry signal. Define your stop level and position sizing. We're going to talk a little bit more about position sizing in a second. Determine your exit signal and define your uncle point. Uncle point being the point at which you say to yourself, hey, I've had enough. And that, you know, this is the maximum that I'm going to lose on this trade. Your uncle point is usually the first stop that you put in a trade. And then hopefully you're looking to shore up and reduce your risk along as your trade develops. Those are always seemingly the best trading plans that I've come across, where you have a movement in that exit, in that stop position, where you're shoring up along the way. Okay. Let's get into master key number 2. So the first key is having a responsible trading plan that fits you psychologically, that fits you on a technical basis, and has elements in it that you believe in, that is calling the shots for you. Now, if you're going to have a, last thing I'll say is, some of you have gurus that you follow. If you're going to trust somebody in this business, you've got to trust them completely. So not sure there's anybody out there that's worth following 100%. But you know, again, I like to say to myself, if I'm going to lose money, I want it to be on my decisions, not on somebody else's. Maybe that's gotten me into some trouble over the years. Maybe it hasn't, but I think it's served me more than it's hurt me. Okay, master key number 2, proper risk and money management employment. I did hit on this a little bit, and I'll tell you why in a second. I'll remind you. The trade level, there are 3 levels really of money, risk and money management. And I got this particular chart, this graph here from a guy named Paul King, who in our Disciplined Trader Mastery Program has done all the work for us in the area of, or most of the work in the area of the risk and money management. And this is one of his slides. He looks at risk and money management in a framing about your life in total. In other words, the first level is the trade level, the actual trades that you have on. You buy 2 gold positions long, you put in your stops, maybe you pick up, and there you have a trade going on. As the trade matures, you have wins and losses. You're shoring up your risk. You're managing a microcosm, a micro trade, just the trade that you have that you're executing right now. Now, if I add to that, trade, and by the way, you really want to stay under 2 or 3% risk on any. That's the total max that you want on any individual trade. If I put on a gold trade in a $10,000 account, I really don't want to lose any more than you know, a couple of $100 or $200 or $300 in an account. That'd be 2 or 3% of that $10,000. So maybe I'd have to do minis if my trading plan has me put on multiple positions. But whatever the case is, when you put on a trade, you want to keep that trade risk below 2 or 3%, depending how aggressive you consider yourself. And again, if you can find ones that are 0.5% or 1% or 2%, those are really the best ones. Okay, so I was going to say do your best. Demand of yourself to stay within that 2 and 3% range on each trade. Now, you have the gold trade on, but if you're like me, you're kind of a multitasker trading. You know, you're kind of waiting for the next bar to formulate, to make your next move, to shore up your risk in a trade. And you have, and you see over there, soybeans look pretty good, or the E-mini S&P just gave you a signal. So you take that with, of course, the same 2% to 3% maximum loss parameter. Now you've got 2 trades on. Well, I call that the portfolio level. Okay. Now you've got your portfolio going on as a day trader, and of course, if you're carrying positions, this would, of course, apply over time. But so if each of the trades, if my gold trade, if my initial gold trade, say, was had a 2% maximum loss on it when I initiated it, and the portfolio level and the E-mini trade had a 2%. Now I've got a 4% total risk if both of them hit their maximum stop. So now I've got a 4% overall risk. Well, that number in portfolio, I like to keep under 5%. I like to keep over 4. I don't like to take any moment in time where I'm subjecting myself to a possible, 7 or 8 or 10 or 20% loss in one shot. I mean, it's good to think that diversification is good, and it is, but I've seen all of the trades lose at a time. So, so you've got to, putting on trades, you've got to consider the maximum risk. What if all of them lost? We're always looking at look at all the money I'm going to make if all of them win. So the portfolio level, I like to keep it about 5%. Now you're going to wind up to see that's kind of a floating number, because if I put the gold trade on and then a half hour later I see the S&P trade, I may have shored up that gold trade, moved the stop up to now maybe a 1% risk. So a trade with a 3% S&P on the S&P, if that was a 3% trade, I can go ahead and take that, because now my original trade is only at 1%. So the total is 4, which is just right at my maximum. I can go ahead and take that trade, where I couldn't have taken it if the gold trade didn't develop. So I'm always looking at not overloading myself as far as risk is concerned from a portfolio level. I think you get enough of that. And the business level, I think we've already discussed that a little bit. I've given you kind of an example of that. You've got to take a look at your trading in general. Not only your trading in general, but your life in general. And yesterday, for instance, I had a losing day trading, but my retirement account and another account I have that's long stock market oriented did very well. And so, my life, even though my trading didn't have a great day, my life had a great day. And the importance here is that the number one thing that's going to help you to stay disciplined and be winning as a trader is maintaining your positive nature, is maintaining your positivity, your positive outlook about you being a trader that is a person that is going to succeed, that is destined to succeed, that has had ups and downs in their life, and everything in their life is now it has come to make who you are today, and that person is a strong, forward-thinking, forward-producing money machine. Okay, so, and when you're balanced, and when you frame things in the right way, you keep things framed, and I'm going to show you how to frame things in your journaling, because I know a lot of you aren't journaling. By looking at things at a business level and at a portfolio level, and not just the trade level, you're smoothing out the mental curve. You're smoothing out the financial curve at the same time. So just remember that when you look to take risk, and frame things so that you remain positive. Okay, the other chart here given to me by Paul King is really where you should be spending your time when you're trading. When you're building your trading plan, you should be spending most of your time in these areas in this proportion. Entry is important. Yes, it so happens it's the top of the pyramid here. Maybe it's the top of the pyramid because the first thing that you have to do, but as if you can see, it's probably 1/6 or 1/8 of the total volume, maybe even 1/10 of the total volume of your what should I pay attention to triangle or pyramid. Position sizing is very important. I've just seen so many people having a great day trading where they're putting on 2 positions and 3 positions in their trading plan, and now they've welled up a nice $1,000 or $1,500 profit for the day, and they say, hey, let's bump that to 4 and 5 positions. Let's double my position size. Since I'm winning, I can give a little bit of that back in order to really accelerate this winning streak that I'm on. The problem with that statement is the first part. I'm willing to give it back. When you offset a trade and you put it in your account, it's a P&L. Boom. it is your money, and it's really not to be compromised. It becomes your core money. You should be just as shouldn't be any more willing to give away that money than you should and just because it happened intraday, it's core money, and you should treat it with that same respect. What I have found works for me, and you may want to try this in your trading plan, is that as I'm winning, I actually reduce the size out of my positions to maintain that, to almost guarantee, to really, for the most part, guarantee that I'm going to be a winner no matter what happens from then on. And therefore, I'm just adding some gravy, some icing to the cake as I continue to trade. Because I don't know how many times you've done this, but where you have 3 trades, they each make $300, you're up $900 or $1,000, and somehow you put on a trade and boom, one trade you lose the $1,000. The losses, when you're out of control and you're not a disciplined trader, you seem to be always bigger than the wins. So position sizing, very, very important, and we can talk all day on that. Exits, you can see that when you're looking at building a trading plan and employing your money, your risk and money management, then exits is where you should be paying most of your attention. How do you move your stops? Should you be using limits? I have this thing, we use it in one of the simple trading plans where I talk about thrust in a market. When a market gives you a particular signal, especially some candlestick triggers, when you see a shooting star or a hammer at the bottom of a run or a shooting star at the top of a run, the opposing direction usually instills, and it hits right away. And so when you act on a candlestick signal that has a strong, certain candlestick signals have a very strong probability of being right away. They may not be after the first bar or second bar. It may come right back down and haunt you. But the idea that you recognize that triggers usually work out of the gun about 70% of the time. Why not take advantage of that and peel off a position on that thrust? Okay, and so I find that exiting strategy, if you can be creative about that, but creative in a take profits way, can be, or let a profit run in the way you shore up your trading, your stops. If you have a plan that works, and you continue to improve that plan on the exit side, that's where you're going to make your big gain. That's where you're going to make your changes that really are going to affect the bottom line for you. Not so much the entries. This is what I found. So I'm giving you, and I think most traders who are successful long term will agree with that. So pay attention to your exits. All right, we're about halfway through. I'm going to continue to move a little quicker here. Master key 3. So we've talked about 1, which is your trading plan has to be pinned to you and your psychology and what you understand and believe in as far as the technical indicators are concerned inside your plan. You want to pay close attention to your risk and money management, not only from a trade standpoint, but a portfolio standpoint and a business. You see your life as a business, really, with your retirement.
Hi, I'm Norman Hallett.
Gold, whatever it is, all of that counts, and you kind of frame things as a whole to keep yourself positive. You got to pay attention to your exits and let your entrances be really the icing on the cake. Master key 3: reversing your poor mental trading habits. None of this happens unless you believe in yourself. And it's, the cart is not before the horse. I mean, if you have a trading plan that works, you can say that it's very easy to start believing in yourself. But I have found that over the years that traders who put that cart before the horse, the horse being you and your intention to be the wise and disciplined trader, it's got to come first. So the root of trading habits, good, bad, both, it's in your mental state. And this quote, "What the subconscious mind holds as true for you dictates how your conscious mind will make decisions." Okay, your conscious mind makes decisions. Okay, I'm going to give you just please pay attention to the next 60 seconds. Here's how it worked, and this is not airy fairy, you know, people oming, which is good also, certain meditations, but this is not far out stuff. The way the mind, conscious mind and the subconscious mind works is proven. And the science behind what I'm telling you is now there, where we used to believe it was there because we saw the results of working with subconscious trainings. We now see that the reason behind it's working. You've taken the brain scans and you've seen the parts of the brain light up when certain concepts are delivered on a subconscious basis. So what the mind holds as true, subconscious mind holds as true, dictates how your conscious mind will make the decision. So it's your conscious mind that's making the decision. Okay? When you get the stimulus to take a trade, it's your subconscious mind it's your conscious mind that will say, I'll take that trade or I won't take that trade. And it's making that decision. It's having you push the button or hesitate based on what your subconscious mind holds true for you. And your subconscious mind holds whatever it holds true for you, whatever is your dominant set of neural pathways, what is your dominant neural net that is the response, that holds the response to that stimulus. So in the case of taking a trade, your subconscious mind may have a if you're hesitating to take a trade, oh my God, I should have taken it there, the market goes, you start chasing trades. Somehow you don't have the belief in the trade. Here's what could be happening. Not say it could, it almost doesn't matter what the reason is, why the subconscious mind is holding, it just is. I can tell if you believe that you're a wise and disciplined trader and you have total confidence in your trading plan by seeing you work your trading plan. If you're doing it without hesitation, I know you believe in it. If you're not doing it, if you're doing it with hesitation, I know that there's something in your mind that's not serving you. In your subconscious mind, there's a dominant neural net with the response to that stimulus that's not serving you as a trader, and it's your dominant neural net. So how do you change that? How do you make that neural net hold beliefs that serves you as a trader and not makes you hesitate? The way you do that is building neural nets containing the beliefs that serve you as a trader. For instance, and you do that by a certain type of meditation. We use it's a light self-hypnosis type of a state, but you can some call it the meditation. It's whatever you want to call it. You take a few deep breaths. You sit in a comfortable position in your chair. You take a few deep breaths in and out, holding to the count of 4 or 5, breathing out. Just do it a few times. That will drop your brainwave from an alpha from a beta to an alpha brainwave state. It's in this alpha brainwave state that you can deliver to your subconscious mind statements and ideas carried by new neural pathways that will build these neural pathways containing the right ideas for you. So if I get myself in an alpha brainwave state by breathing in and out, and then play back to myself statements that say, I'm a wise and disciplined trader, and I do the things that a wise and disciplined trader does. I take every signal immediately after my trading plan gives it to me, because my trading plan is built on solid ground, and I know that by following my trading plan without hesitation will give me my best outcome. I'm a wise and disciplined trader, and I do the things that a wise and disciplined trader does. Okay, if that's what you're repeating to yourself, we have these 7-minute suggestive MP3s that in our course that have been maximized, that we know over the years have helped traders quickly and easily to form the right neural pathways in order to create the neural nets. But you can do this on your own. You can record some good ideas. Make sure it's a first person. Make sure I. So you're talking so that you're addressing yourself personally. Make sure that they're positive statements. So say I've stopped. Don't say anything about I'm done not taking trades when my trading plan is always positive. I always take the trade. So positive first person suggestions. Do that, and then get yourself in a comfortable position. Play it back to yourself. Repeat important statements a few times over, and you've got it. Okay, you do that a few times. Every time you do that, you're building a neural pathway containing that message. And if you do that through repetition, if you do that a couple of times a day for a week, you're going to be building enough neural pathways to form a neural net. And now that becomes your dominant neural net when the stimulus of taking a trade happens. Okay, do you understand what I'm getting at here? It's the importance. Are you enjoying this? Let me just I haven't said, want to see some comments. Kind of seen some questions here. Just wanted to make sure that you're with me. Okay, good stuff. All right, thank you. Let's continue on then. Again, if you have a problem in your trading, you're not patient enough to wait for trades. You won't let that last bar form, and so you jump in because you want to get that extra ticket too, and then of course the bar collapses and you say, I can't believe I got myself. I didn't have the patience to wait 30 seconds to see the bar finish out. If you find yourself impatient, or you're not taking trades, you're not hitting the button when your trading plan tells you to, or you lift your stop because you believe they're out there to take you, and then they're just going to put it back just like the last time, and you would have made money if you stayed in, so you're not going to let that happen. If you find yourself doing all the wrong things, identify what that is. I mean, I've just given you a patience situation. I've given you a lack of belief in your trading plan situation when you're not pulling the trigger. You should have a mental training for each one of these things, and you should be working on those areas to build neural pathways. Because while you're not training your mind, what's happening around is that you're getting negativity and doubt about you see a long trade going on in the S&P, and it's clear as day to you, and you just hear Jim Cramer says you got to be cautious in this market, and only a fool would buying at these highs or whatever. You know what I mean? And that's creating a neural pathway, a new neural pathway, creating a new doubt neural net that's going to have you not take the trade. So you need to keep refreshing and keep active the neural net the neural nets that are serving you. So in your brain, I see them lined up as little light balls in my head. I have a positive. I'm very patient. I'm very, I believe in my trading plan. I'm very balanced. I don't chase trades. All of the things. These are all lights in my head that carry the right message, so that when the stimulus happens, I'm responding the right way. You got to be the same way too. Okay. All right. Whoops. Let's see. Master key: train your subconscious mind with thoughts and beliefs supporting to the disciplined trader. I'm going to call you all now the disciplined traders, okay? Because you're here, so you must care. All right, here, let's go through some subconscious characteristics. I've only got about 15 minutes, so I'm going to start flying here. Strength to pull the trigger, okay? It's about taking action. It's about acting on your conviction. Can you believe, and can you believe in yourself? It's believing in yourself and believing in your system. Most of the strength to pull the trigger issues come from not believing in your system. Okay, and so you got to backtrack and make sure that the system reflects who you are. I keep on saying that. And if you've ever downloaded my book, I have a book on Amazon, or I don't think it's downloaded, but I think it's $17 or something, on building a trading plan. The first half of the book is almost about you being making sure that your trading plan reflects who you are, and not just taking it from somebody else. Okay, overcoming thoughts of fear and greed. Overcoming fear of losing again, that's a fear. You took a couple of losses, and now now, see, that's when you start to weaken. That's when the negative. That's when you create your own negative thoughts. But if you have one of our flashpoint buttons, listen to this. Whenever I feel a little weak, or whenever I think myself, I want to take this trade, but I'm feeling a little weak, I hit my flashpoint. This is like an easy button. Well, I guess it's not working today, because I haven't hit it in a while. Anyway, it says I'm a wise and disciplined trader, and I do the things that a wise and disciplined trader does. Anyway, it's a fun thing. Can't believe I didn't get that working. Proper perspective in winning and losing. So fear, again, big. You gotta overcome the thoughts of fear and greed. Greed could be worse than fear. Avoiding fear, you gotta avoid feeling bulletproof. I mean, especially again, that where I mentioned that you made $300 trades in a row, and you pick up the number of positions you're trading because you're feeling bulletproof. You're keeping target orders in. You got to keep target orders in, because every trade we take, especially for me if it's gold or silver, because again from 35 years ago, I still believe that impressive. When I saw gold go to 850, I think it's going to happen. Well, of course it's happened again many times, and now that number is 1800. But every time I buy, every time I'm long gold, I think this could be it. And I hate to keep my target orders in, because I don't want to take the top off the big $1,000 gold run. You gotta pay attention to your thoughts of fear and greed. Okay, trading to make money. We're here to make money. It's a business. Okay, trading is not for ego. It's not proving things to others. I mean, it's very reactive, and it's very common that, you know, people don't even know what we do as traders. I mean, they think we're gamblers. They think we're, you know, Madoff who hasn't gotten caught. They don't understand. You know, you're just like Madoff. You're just trying to make money. That's really not working. They don't understand. And so if you spend your time proving what you do to others, believe me, as you consistently start to make money, they're going to come to you and ask what the hell you're doing. So it shouldn't be the other way around. And please don't tell them. Keep it to yourself. We want to keep the mystery around trading. Okay. Visualizing success as a trader. You got to see yourself again. You've got to project. You've got to project where you are as a trader. Where you see. You've got to start with where you are, and then you've got to see yourself exactly where you want to be. Now, my particular, my favorite visualization is I close my eyes again, a few deep breaths. I do it in the same alpha brainwave state. Few breaths in, then I see myself on a yacht, on the back of a yacht, holding a martini, sitting on it. Everything's white. It's a white ship, and it's a white table, and I'm sitting on a white, you know, director's chair. It's just me, and I've got a martini in a clear glass, and a beautiful secretary. I guess that's sexist. You know, you have your own darn dream, but. You know, somebody my assistant hands me my statements for the day, and I see another winning trading day, and I laugh, and then I point to the captain. And I have him take me to Bimini. This is my picture, and it's a fun picture. You can have your own picture, but keeping a picture of where you're going and why you're doing all of this. You know, you may want to have a picture of your family taking a trip to Europe and having a second home there, and whatever is important to you for the moment. I have a few of these pictures. That seems to be my favorite one for the last 6 months. And remember, when you're visualizing, you're not trying to be or learning to be. You're visualizing exactly what you want. You move in the direction of your most predominant thought. And so that when I repeat that picture in my head every day, when I go to do something, part of me says, am I doing it? Is this going to help me get where I want? Is this going to put me on the back of that boat, pointing to the captain to take me to Bimini? Okay, you've got to, because thoughts are things. Thoughts is where you're going to, your visualizing is where you're going to step through to your action. So again, this is stuff that you can spend days on, but visualize your success as a trader. Characteristic 5, strength to take losses. You got to take losses. Strong traders, they'll take a lot of losses, but small, and they'll be there for the big game. Here's the best way to look at it. By closing the door on a losing trade, you're opening up the opportunity for a winning trade. Close the door, put it behind you. Now let's take on the opportunity for a winning trade. Can't tell you how that framing helped me about 10 years ago. So I'm giving it to you. Okay, losses are part of the winning process. Strength to take your losses. You need to avoid the devastating huge loss. You don't want that 10%, 20%, 30% weekly, monthly loss, because that's the gut punch that takes away your confidence and unwinds everything. You must avoid the huge loss at all costs. So all of our simple trading plans take very short losses, and because I want, especially beginning traders, to learn to take losses, and small losses, and I want them to relish the next opportunity, and I want them to stay positive in their vision of their success and what they believe is going to happen. Okay, sustaining focus. You got to be focused. Multitasking is overrated. Okay, I told you the extent of my multitasking, being in 2 markets at the same time, but I'm usually trading off 15 and 30-minute charts, so I've got a little time in between trades to see things happen. I like to, when I can, I take 90 minutes on and 30 minutes off, especially on what I call my buffer days, where I may be working on my trading plan, or I may be do some back testing. I like to do manual back testing, really looking at charts and markets that I like, and trying to see whether certain tweaks would have helped or not. I spend 90 minutes on it, and I get up and I water the garden here, the plants or whatever. We have a whole orchard we just put in the back, so I've been spending my time seeing whether the avocados are going to beat the mangoes. But the papayas are winning right now. And the limes, I think, are in close seconds. I got a lot of trees out there. We have some fun. But I take my 30 minutes off and hit a little bit of nature. Then I come back and I get back to the screen. So give yourself a break. Exercising patience. We talked about patience. You got to wait for the A trades. If there's one thing that I have to continue to knock over traders' heads, is that you're better off taking no trades than you are taking B plus or B trades. Wait for the A trades. Wait for the high probability setups, the ones that you've seen in back testing and forward testing, the ones that you've experienced after you've traded your plan for a while. You'll see certain combinations of your plan, certain triggers work better than others. So make that the control trigger, and then look to test other triggers. But you look to eliminate things in your trading plan as much as you look to add things in your trading plan. Only take A trades. How many times have you gone to your monthly statement and you look down and you look at the beginning where it says $20,000, whatever your balance is, and then you look at the bottom, it says $20,000, and you have all these trades and all this energy that you've done from all month long, and where did it get you? It got you nowhere. So you've got to be very particular. If you stick to your high probability trades, you're going to get better results. So you got to be patient. And I would say that if there's any mental training that I do more than others, it's the one on patience, because you can see just the way I talk, and me and Kevin, we're New Yorkers, and the world moves fast, so we want to keep up. And so exercising patience is something that I always have to remind myself of. Okay, sustaining discipline. It's a marathon, you've heard this before. It's a marathon, not a sprint. You got to make your training a discipline part of your routine, part of every day's routine. Okay, and then you've got to manage your stress. I have a high blood pressure issue, so I've got a machine here. I've always had it in my family, and even though I exercise and eat better than 99.9% of the world, I still, if I didn't take my pill, I would have my high blood pressure, and so I'm constantly, not constantly, every other day or so I'm measuring my blood pressure to make sure, because that's a reflection to me of my stress. You got to stay unstressed. You got to take breaks. You got to adopt a relaxation method. Okay, subconscious characteristics of the subconscious trader. You can go through all of these. These are the ones we've all just covered. Patience, sustaining discipline. All right. Master key number 4, effective trading. I'm going to look at my time right here. Wow, I only got about 5 minutes. So let's, I'm going to give you just the journaling tool, and then I'm going to say goodbye. Here's the way. If you're not journaling, you need to start right now, and here's what you do. You start with a positive, you first start. I want you to journal twice a day, and at the end of the day, I want you to assess. You need to decide what you want to improve. But you start with what you did right today. So in my journal today, I took every signal. I took every entrance signal my trading plan gave me. I was the perfect trade taker today. Okay, so always start off with something. It's like the old 1-minute manager formula. When you run a group of 60 brokers, I used to use 1-minute manager. I think this is where I got it from. So when you're dealing with yourself, you've got to sandwich the issue with the good things that happen. Again, it's all about staying positive. So you go ahead and make a statement, positive statement. Today I was the trade taker. I was perfect. And then you have to approach what didn't work. So, and what didn't work was, say, you moved your stops. You moved your stop because you thought you were going to get hit. Today I was unlike, but I was unlike myself today, when I moved my stop because I thought I was going to get hit. Okay, I was unlike myself today. I did an un-Norman-like thing. You can use your own name. I make the statement and I take responsibility for it, but it's not usual for me. Okay, so again, it's another step in keeping the belief in yourself that you are the wise and disciplined trader, and you do, because the more you believe, the more it will be. Okay, we've talked about thoughts. So positive statement of I did an un-Norman-like thing. I always start with that. Or I did something, I was beside myself. That's another thing I use. I moved my stop because I fell victim to thinking that they were going to hit my stop and the market was going to go back. And then you make a statement of correction. Tomorrow, I will be the stop king and manage my stops exactly according to my trading plan. Okay, so the corrective statement. You can listen back to this because I'm going to rush here. And I always end with, I am the wise and disciplined trader, and I do the things that a wise and disciplined trader does. I'm a wise and disciplined trader, and I do the things that a wise and disciplined trader does. I use it in my affirmations. I use it in my visualizations. I use it in my journaling. Okay, so and then the next day, before you start trading, right after you do your 7-minute mental training, or however you're doing your subconscious training, you want to journal and you want to say, today I am the stop king. You want to take off on the afternoons, on the previous day afternoons statement, and you want to say, I am the stop king. Today I will be managing my stops like a professional that I am, exactly according to my trading plan. I'm a wise and disciplined trader, and I do the things that a wise and disciplined trader does. Okay, so start journaling at least with that. I mean, you got your monthly statements for your trades that go. When you start journaling like that, and I'm going to tell you, you're going to have the kind of results that I think it's the best individual thing that you can do. Okay, self-evaluate. What did I do right? Again, what did I do right? Where didn't I didn't I follow my plan? What caused me not to follow my plan? In my example, I said I thought that the traders would take my stop. Somehow I got emotional or whatever. What will I commit to tomorrow to make me disciplined in that same situation? So this slide explains what I just talked about. Okay, and Master Key 5, framing your trading as a business. Your trading plan is your business plan. It's all about the bottom line. Control your cost. Again, control your risk. I'm not sure, we can talk about diversifying, but I'm not, I think for some people, and pretty much for me, I like to load up the basket and watch that basket very closely. But do it your own way. Clearly defined procedures. Okay, and your business is part of your life, not your life. I used to walk out of my office. My wife would know exactly how my trading day went. Did I make money? Did I not make money? Because you can see it on my face. Now she can't tell for the last 10 years. So I'm very proud of that. That I'm not letting down days in the market mean I'm going to have a down day in my life, or I don't mean up. Well, but I do let the up days. Maybe I'll go to a special place if I make extra money more than I even planned. So, I twist it my way. But again, balance is the key. Okay, so there are the 5 keys for you: sound trading plan structure, proper risk money management, reversing the poor mental trading. I know I've given you a lot. Go through these slides again on the recording. If you want to get on my list and talk about, we can talk a lot about, and just get my daily, monthly, weekly feedback on all this good mental stuff. It's free. Just opt in. Go to thedisciplinedtrader.com. And if you want to really look deeply into what we are as far as our mastery kit is concerned, go to realtraderwebinar.com/disciplined trader, and it'll take you right to the mastery kit offer, and you can see what we have there if you're interested. Okay, so but at least get on the list. Either way, do your thing, and I appreciate your time and attention here. I guess don't have time for questions. I'm sorry about that, but do we have time for questions? I see Norman outstanding. Thank you, David. Great job. Appreciate that, Mary. If my time is up, then it is up. So again, thank you, Andrew. Andrew W. Salim. Which is your best book? I think it's the Trading Plan book. I like that trade. Hey, I'm coming out with a new book. It's I can't tell you about it, but it's for the bathroom. you'll have in the bathroom. It'll be a bunch of quotes to help you be a better trader. All right, well, thank you everybody. Kevin